As expected, the Fed held their policy target rate steady at 5.5% for the 7th consecutive meeting, and the vote was unanimous. The Fed indicated they had seen modest progress on inflation, which was a departure from the prior meeting where they had cited there was lack of progress on inflation. In addition, at this meeting, the Fed released their summary of economic projections, aka their dot plot. And the dots indicated that the average committee member would expect to see one cut by the end of the year. The prior release was in March, where they had the average expected 3 cuts by the end of the year. But again, this isn't meant to be a blueprint. It's really an average of the whole committee and what their feeling is at that given point in time. So it's not a definitive roadmap on how many cuts will actually occur by the end of the year. Nothing really surprised anyone in this meeting. I mean, nobody really expected any sort of policy rate change. In the prior meeting, the Fed had announced that they were going to slow the pace of their balance sheet runoff. But this meeting, there was no announcement of any sort of change in monetary policy tool like the last meeting. I think what raised some questions was the pullback in the dots from 3 to 1. And Powell admitted that the committee came to the realization that inflation had not been slowing as fast as they had expected, that this was going to take a little bit more time, so that caused the reduction in the dots. But the calendar also plays into this. There's only 4 more meetings left in 2024. One of those meetings occurs the same week as the presidential election, and they're kind of going to be reluctant to do anything around that time. Typically, the Fed likes to give some lead time, 1 or 2 meetings when they're actually going to do something. So given the fact there's an election, given the fact that they would love some lead time, and the market would still like 2 cuts, it just doesn't seem possible to give 2 cuts. So that even wasn't a surprise that the Fed only indicated 1 cut on average by the end of the year. I would actually expect a lot of volatility in June and July. Okay, the next meeting isn't till the very end of July, July 30th and 31st. Between now and then, we get 2 PCE reports, 1 CPI report, employment reports, and all the other metrics that the Fed would use to make their decision. Now, I don't fully expect any decision to be made at July, but again, they would like to message that perhaps a move is available to them in September, but the data might not then make them comfortable making such a decision. So any piece of economic data that comes out, there's going to be a lot of market hypersensitivity around that to see, because the market wants 2 cuts. And if the Fed can't deliver a message at the end of July, they might disappoint the market. So these next couple weeks, again, are very important as far as economic releases in regards to how many cuts could we potentially get. It really only seems like 1 is actually feasible at this point. Despite the only modest progress we've made on inflation, we still think high-quality bonds are attractive for investors. Rates have rallied a little bit. Yesterday we got a pretty positive CPI report which called rates to drop, but that still hasn't closed the window on anyone looking to invest in bonds, perhaps to move out of cash and go 1 step into high-quality bonds. It's not too different than the message we had at the last meeting. It's still a lot of capital appreciation available, a lot of carry available. It really is a good time to look at the high-quality bond market. Just because the focus has been on how many cuts are going to occur in 2024, that doesn't mean we can't start seeing cuts in the early part of 2025. It certainly feels like the Fed wants to give you a cut, but they do like to time things perfectly and telegraph their message, not to spook the markets. Powell said in his meeting yesterday that he does feel rates are restrictive and at some point the economy could weaken. They just need a little more time. So while the market's hyper-focused on how many cuts in 2024, you might only get 1 cut in 2024, but that doesn't mean you can't get a cut immediately in 2025. We're just too fixated on calendar year ends that we're not seeing that cuts still could be coming in a couple months, regardless of whether the year turned on the calendar.